Hello everyone. Good morning, good evening, depending on where in the world you are. My name is Vedant Batra, and I would firstly like to thank you all on behalf of the Impact Investors Council for taking out the time from your busy schedules to attend this insightful and informative masterclass on investor readiness for climate tech investors. The Impact Investors Council is a non-profit industry association of impact investors in India. Our mission is to encourage private capital to bridge the social investment gap in India while exploring innovative investment asset classes and structures to drive impact. We have the active support of prominent impact investors, commercial investors, foundations, and social enterprises across India and the globe. As we look forward to the second day of the India Climate Investment Conclave, I believe this masterclass will prove to be the perfect segue into the panels and sessions that will take place as the day progresses. Before we begin today's session, I would like to provide some context to the intention we had while designing this masterclass. As the world rushes toward a climate emergency, it is now more apparent than ever that asset managers will have to play a pivotal role in mobilizing resources to help combat climate change. It is therefore imperative that existing and aspiring investors are provided the necessary tools and technical know-how to not only incorporate climate consciousness into their investment models, but also directly find actionable solutions to help sort of facilitate climate change mitigation, adaptation, and resilience. Therefore, climate tech investing needs to be mainstream. There needs to be a push towards boosting capacity building efforts in the ecosystem, as has also been outlined in the early stage climate tech startups investment landscape report released on day one of the conclave. And this is exactly what this masterclass intends to do. It will provide you an overview of the climate tech investing ecosystem, from the key drivers of growth in the sector to the pipeline building and due diligence efforts required for climate tech startups. This masterclass will be facilitated by seasoned climate tech experts, Pratap, Raju, and Nalin Agarwal, both of whom are founding partners of the Climate Seeds Fund and the founder and partner of Climate Collective, respectively. I truly believe we could not have had a better duo to help share with us the depth of experience in the sector, and I'm looking forward to this masterclass myself. Lastly, we want this to be an interactive session, so please feel free to raise your hand by pressing the hand icon in Zoom during the masterclass, or typing down your questions in the chat, sending them to me directly, or you could even post them in the general chat and we'll incorporate you into the discussion. So now, without any further ado, I would like to hand it over to Pratap and Nalin to take this forward. Thank you.
Great. Thank you, Vedant, and thank you for the team. I see this as a wonderful conference, and I think it's it'll be very powerful to get more people to look at investing in clean tech. Nalin and I have been involved in clean tech for many years, since 2010, as initially solar wind developers at the very beginning of National Solar Mission, and the last 5 years in building up the Climate Collective, and we have seen a lot of changes from when we started in our first hackathon in 2016. Now we have a fund, Climate Seeds, that Nalin founded and co-founded, as well as an angel network to facilitate more capital into clean tech startups. What we'd like to share is both, some of the understanding we have of the clean tech startup sector itself, in some aspects of investing in clean tech, some of this research we've done, survey lots of angel investors and other groups for our angel network, and our experience generally in clean tech investing. Before we start, we are using something called, now I'll let you introduce yourself more once you come in.
Sure. I've just put it on chat.
We use something called AHA Slides. It's an interactive tool similar to Mentimeter. You can see the URL on top. You can just type that into your web browser as we kind of, poll and ask questions across the session. The URL is also in the chat. It's just very simple. Just copy it into another browser. Great. If there are questions, do put it in the chat over time, over the session, and especially if something is more intriguing and you have a very specific question, or you want to point something out. and we'll try to bring you in in the middle of the session as well. Great. So let's start with a very quick poll, just get a sense for who's in the room. Cleantech investing is new, and we'll share with some data that is in the report. It's already quite large. That's different in India. So whether you are here just to learn, maybe you're not an investor, or you're an investor still exploring, or you've already invested in Cleantech. So give us a sense. What we have seen in our interaction with investors across India, we do this in our angel network across South Asia and Southeast Asia, is there is a tremendous interest from angel investors in this cleantech space, but it still hasn't taken off in the region compared to the rest of the world yet. Great. So just to learn, thank you. And I think this is probably indicative of where we are in India as well as its early stages for cleantech investing. Maybe another question here, especially for those who are already investors, not necessarily in cleantech. Some of the things that really either hold you back from investing, or you'd like to see more of. Actually, it's a positive question. What would help you gain confidence to invest more? Whether, for example, access to more quality deal flow, visibility on exit pathways, especially as it's a new sector. Technical due diligence, cleantech is complicated. It's, we don't have people in our network to help us understand new technologies and oftentimes even new business models around cleantech. Of course, knowledge about the sector as well, and the lack of people we can co-invest with. And this is quite interesting. What I'm seeing already right now, it's quite dispersed across all these. When we had talked to angel groups and angel investors across South and Southeast Asia a few months ago, these were actually the barriers that they also indicated, and it was widespread. It wasn't one thing that was sticking out. There was something about access to quality deal flow in particular, but I think that there were real barriers across several aspects of investing in cleantech. Great, thank you. And let me just quickly share my other screen. Okay. Nalin, you can see this screen.
I can, yeah.
Very before we start, it's good to know who's speaking. Some of you may know who we are, others may know. Even though it's only 5 years in supporting cleantech startups, we feel like veterans, and that's how nascent, for example, this sector could be maybe here in India. We've been involved, we're a nonprofit that's been set up to support cleantech startups. Our fund and others, of course, are for-profit so that we can leverage the right key stakeholders. But we've been supporting early stage startups since 2016. Almost 600 startups have joined our accelerators since 2000, actually in the last 3.5 years. And with 2 more programs that's just launched and 1 more, I think this number is going to reach 700 by December. So one thing we do get is a really good look at the early stage cleantech startup ecosystem, those startups coming to the market in India and South Asia, in India. We have been active, of course, for 5 years in Sri Lanka, Maldives, India, and UAE, and through partners in Nepal. We do support startups in accelerators. So if you're about to enter the market, you're getting your first pilot sales, you're still doing customer validation. Oftentimes, that's where our first interaction with many of these startups come. We also support aspiring entrepreneurs this year as well, as we see the demand explode from 2016 after our first program. It was a very quiet sector, but now my informal estimate, and this is for not the ecosystem as a whole, but in accelerators and incubators, is that I know that the data is maybe something different, but I think 1 out of every 7 startups that are in cleantech in incubators, and that's something that is coming up more and more in the last 2 years. Background-wise, as I mentioned, we were solar wind developers, 84 megawatts that we developed and commissioned in the early days of National Solar Mission from 2009 to 14, before switching to supporting startups more directly in the climate cycle. So I think I went through this already, the accelerators, entrepreneurship programs, as well as our capital programs. The one that you may know is Climate Launchpad. It's been active since 2017. And last year, for example, we had almost 200 startups in this program, 6-month program. This year a little bit less because of COVID. We have other programs you may know, like Electron Vibe, which works with energy startups, getting them pilots with discoms. This is year 2, and so on. The Angel Network, the Seed Fund, and a new grant platform called Climate Pitch. We also do a lot of ecosystem work. For example, this India Climate Investment Conclave is also in the middle of what we run Climate Startup Week, where we have 22 events to support Cleantech startups, pitching, training, convenings, talks, and the regional finals for Climate Launchpad on Saturday itself. Jobs fairs and other ecosystem supporting activities. I don't want to spend too much. Our main partners are the EU's Climate Kick. Okay, see, it's the EU's leading climate innovation initiative. Something like 3,000 startups have gone through this ecosystem. Cleantech startups, and increasingly a global portfolio as well, like here in India. Another key partner for us, we're also New Energy Nexus India. New Energy Nexus started in 2004 by the state of California to invest in clean energy startups there, and has since grown to 10 countries, including India, and a bunch of other great partners. Great, so now you know a little bit about us. So net zero, our goal, at least often in our activities. If we were to reach net zero by 2050, the latest IPCC report perhaps suggests that our time is even more limited, some action that we would need perhaps in the next decade itself to limit to 1.5 or 2 degrees, so 2 degrees over this century. It's very likely, of course, that we're going to reach 1.5, and 2 degrees seems possible. Now, we have no choice but to invest in clean tech. Now, we already know, for example, that not just in India, but across the world, solar and wind power plants have been growing dramatically in most countries, or many countries outside a couple of 2. You see things like 90% of new power plants, solar and wind, are solar and wind plants. So our new growth, or even replacement of existing stock in power, is primarily solar and wind, with a couple of key exceptions. And this is amazing. It may not be enough, but it's amazing because this was hard to predict 10 years ago. Now, we also know that a lot of the technologies that we need for getting to the zero economy have already either are known and largely solved. I think what we're now looking at is really the economic or business challenges to deploy most of these solutions. Now, we do have, of course, many challenges besides science and economic. There's policy bottlenecks. This is something that we always face across the world. Reversals, etc. There's, of course, even though we're winning in solar wind, there's a lot of sunk costs with existing, for example, fossil fuel plants, oil and gas plants. That how do we increase the coverage of clean tech and clean energy solutions so that even those, for example, get shut down sooner than perhaps some stakeholders would like. These are challenges that need to be addressed, of course, through sovereign, government policies, international, agreements. Paris Agreement we all heard about. More R&D, we need more capital and more deployment. This is where we as investors can come in. It's the capital allocation and helping on the deployment. Now, this is from a nice little graph from the IEA, International Energy Agency. Keep forgetting if they're agency or authority, but I think agency. Their net zero report. If you look at the technologies out there, And if we're to achieve net zero by 2070, one thing comes out is that there's a significant amount of technology that hasn't been either invented or deployed or even demonstrated now. And this is the scope for where innovation, large part of it going to be driven by clean tech startups. From a broader picture, it's an energy problem. If we need to go to decarbonization. As clean tech investors, maybe this is not as useful as it seems. This is more about looking at the sector as a whole. We'll see many clean tech startups in energy or energy related fields. But as an investor in clean tech, 3.2% in waste impact in decarbonization is also a big sector. So we will see a wide range of startups, clean tech startups coming in to support decarbonization. Very small little fact that maybe most of us know, but good to reiterate. 2/3 of the world now live in countries where renewable is cheaper, is the cheapest form of power generation, and that does change many things, including mindset, especially amongst policymakers, as well as acceptance. When Nalin and I were solar developers in 2009, starting in 2009-10. We were still seeing people tell us in 2012, 13, ask this question by Titan, corporate leaders, does solar work? And at that time, I don't know, but I think something like 50,000 megawatts of solar plants were on the ground around the world. And this question came out. And now the world has changed. There's acceptance, of course, that it does work, and it is providing very low cost power. As we saw from what I said earlier about new power plants coming up. Now, clean tech, and you can see I said clean tech, but it's climate tech here. There is because of the nascency of this sector, there's a lot of definitional problems. We're moving to climate tech in particular because it's as a wider term. Here's our taxonomy. Sometimes when I say climate tech, people say I'm not interested in climate tech. I'm interested in mobility or sustainable mobility. Kind of throws us off, but it's also something that I think we highlight in our report, the need for more taxonomy that can be shared amongst the investment community as well. So our wider definition of climate tech does look at areas that impact climate change. Standard ones, clean energy, renewable. Solar, wind, biogas, so it's also non-electricity as well. Of course, as clean tech investors, we're talking more about the technologies rather than the project businesses. For example, if you're a solar developer and you need capital to build more solar plants, you're not really coming to the VC community. You're going to other sources of capital. So data analytics solutions to make plants more optimal, forecasting power into the grid as that becomes part of the requirements to inject more solar and wind into the grid. Energy storage management, we're seeing, efficiency HVACs, a more efficient HVAC, smart grid, something that our Electron Vibe program really also focuses on in particular. Mobility, which as you may have seen in the yesterday in the launch of the report, like elsewhere in the world, mobility is our biggest sector so far today in terms of investment flows into clean tech startups. We're talking about shared EV fleets, EV charging stations, battery swapping solutions, etc. Energy access is there. It's not. We do put it in there, but we do recognize that energy access is somewhat different. It's not something that is at least the VC community. If I could try to separate that from the impact community, looks at because of the difficulties of scaling and other things, but it is part of the wider set of clean tech solutions we need. Carbon, sequestration and others. Less so here in India, but it is an area starting to come up. We look at clean tech to, of course, include also circular economy. As we know, there's more and more waste solutions that are increasing, scaling up, and getting investor, VC investment into them as well. Air pollution solutions, of course, are there as well as certain aspects of agriculture is a big sector. Maybe it's not fair to include agriculture into clean tech, but there are aspects of agriculture that do focus, for example, solar power cold chains. We could see also, lab or plant replacement for meat. In fact, one of my friends runs Amore Gelato. I think many of us or most of us know this ice cream and maybe have tasted it. He has actually also created a vegan gelato that's passed all his customers taste tests as well. And these are solutions we could be seeing more of as well. Beyond these two broad categories, there's a few categories that cut across climate change and circular economy. For example, data analytics, solutions, fintech, which is could support climate fintech, could support both climate change, which means largely energy as well as waste, although maybe a preference or leaning towards climate change. And blockchain are ideas that are coming up, and you'll see that more and more, for example, in circular economy. In fact, 2 days ago at one of our sessions at Climate Startup Week, we had someone from Shell Foundation telling us about a very exciting new REC, Renewable Energy Certificate, distributed REC that's based on a blockchain platform. So it is being used in areas of climate and cleantech to support other use cases as well. Now, actually, Nalin, if I'm running beyond time, just let me know. I'm not keeping track of time.
Okay, it's okay. These are all important things.
Right. So for those either old enough to know, or for those who are not but still have seen the history of clean tech, this is not the first time clean tech has been popular, and it's something that we have to acknowledge. And I think if I recall, in 2008 in Silicon Valley, I can't remember the number, but something like 60% of venture capital in Silicon Valley went into clean tech. And that's an amazing number. And that was a very unsuccessful phase for clean tech. I remember those days where there was talk of organic solar cells. We're a solar developers, so we kind of came across many things. It turned out that the winner, for example, in solar was a crystalline technology that started in the 1950s. So there was a lot of bet, especially on technology that was still being either developed, R&D, that were exciting on paper and maybe will be the solutions of the future, but it did not work for the venture capital industry. And in fact, one of the things that we did see in our research is that maybe current GPs may not feel that a lot of clean tech, at least, would be suitable for venture capital. So we are seeing more players, corporate VCs come in. We are seeing specialized VCs in clean tech coming in. For example, our partners, D3, Third Derivative, are looking at hardware, an area of clean tech and generally perhaps in venture that is shunned versus tech and asset-light solutions. Now we've seen a little resurgence that kind of started to pick up in around 2013, and especially in the last few years in particular, where Clean Tech 2.0, which is why we're trying to call it climate tech, and others are increasingly, it's not accepted yet globally. It's like it is different. There's a wider scope in which of sectors besides the clean energy and energy generation technologies in particular in Clean Tech 1.0. It's also much cheaper to do clean tech startup here. If I was trying to have it, for example, again, an organic solar cell startup in 1.0 in 2006, I wouldn't need a lot of capital. Now that we have, for example, a large renewable energy install base here in India and globally, we're seeing solutions like robotic solutions like clean panels with much less water or in difficult to reach locations. We're seeing more data analytics solutions that can help make existing solar plants more efficient. And these things are getting closer to lower capital requiring startups that are also of interest to clean tech investors. And we're seeing tailwinds that are different from 10, 15 years ago. we have yet to see how significant these tailwinds are, versus, Kyoto Principle Protocol from the past to Paris Agreement. But there does seem to be a lot more, for example, corporate commitment to clean tech across the board, not just in energy, but also in waste. Yeah. We do hope it's different, but this is the risk of clean tech 2.0 that we all face when we look at this sector. Clean tech investing, of course, is different from typical investing. In fact, one of the challenges we do see for existing investors is prioritization to clean tech, especially in other countries where the startup ecosystem is starting. People are focusing on fintech or consumer internet and areas that they've read about a lot. They've seen some successful startups in the region and globally here already. And to get them to look at clean tech is a challenge, despite what we believe are exciting opportunities in the space and what others do believe globally in terms of at least their capital. So we do see, for example, some of these challenges. It's a technical field, so it does require domain-specific skills. It's not as easy to find this talent to start a clean tech startup. So we are seeing one positive trend in this that Nalin will touch on later is more people from other startup sectors coming in. So we're seeing talent come in from the startup ecosystem into clean tech, but we still need these clean tech domain-specific skills. Regulatory constraints are always there. As a solar developer, we've seen reversals or difficulties. So this is something that if people are, for example, innovating for IoT solutions in plastic waste because of upcoming EPR, extended producer responsibility, that's driving corporates to think about their waste. There is this kind of policy risk that needs to be taken into account. Clean tech again clean tech is a term. It does encompass many industries, many technologies. Energy specialist, where our backgrounds is energy, renewable energy. When we got into waste, even though they're both clean tech, it was a different industry. And most investment groups and generally groups do not have perhaps a wide enough network to look at all the types of technologies coming up. Of course, most investors do try to create investment theses that they're comfortable with, but even these may need some support from technical experts that need to be built. Just to go on, I think we were talking about this earlier. Hardware solutions and clean tech may need bigger checks than maybe what you see in an app that has come up. Apps oftentimes can see traction in a short amount of time, and hence you can have smaller checks in fundraisers that are quicker. Clean tech, depending on the sector you're talking about, does require often more time for many reasons, both because the technology is more complicated. A lot of clean tech is B2B, so the sales cycle is much longer. Imagine selling to a big FMCG. It takes forever to get onboarded. The product trials. We had great partners in solar, for example, with Blue Star, but we had to work, for example, with their dealership network, which also was a different process, and it extends the time. So these checks both kind of cover bigger checks for the hardware components in many cases, or the capex requirements of clean tech, as well as the longer sales cycles as well. And similarly, for the same reasons, the time scale to exits may be longer. And this is maybe something we're thinking as investors. Do we have the patience to invest in clean tech, even if, for example, the returns could be similar, to be able to be structured to accept the timelines, the different funding rounds that may differ as well. Great. So I'm going to hand over to Nalin just to kind of share some of the global trends first on clean tech.
Cool.
Great.
All right. Good. Thanks, Pratap. All right. So over the next few minutes, we'll just try to highlight some of the trends in climate tech investing globally, right, and then in India as well. So what we've seen over the last few years is a definite increase in both the number of deals and the amount of investment that's flown into this sector. So from as little as 400 million, just over 400 million in 2013, it has risen to 17 billion. And in fact, 17 billion in 2020, but almost the equivalent amount in the first half of 2021, right? So it's already amongst the top 5 or 6 sectors that attracts venture capital in the world, right? So, and just keep in mind, this is venture capital. It doesn't include the huge amounts that go into, for example, renewable energy infrastructure, whether in solar plants globally or wind farms, etc. So this is excluding all of that. This is pure, in a way, risk capital, growth capital as well, right? So, and the kinds of funds that are being set up now, specifically for climate tech, is also increasing. We've seen, I think, I think even in India, there's about 270 funds that are involved in some form of climate tech deals. In the last 1 year itself, there's been 1,000 funds that are investing in climate tech sectors. Right, traditional VCs, the ones that are more sector agnostic, are also increasingly setting up a dedicated fund structure and their own fund theses for investing in specific sectors within climate tech. Right. Then there's the corporate VCs, not just the energy majors, but also a lot of the FMCGs, Unilevers, etc. of the world that are now deploying capital in climate tech. And then, of course, there are the government sovereign funds, DFIs, and foundations that are deploying capital. So these are names that you know. We just put some of them, and we'll come deeper into some of these in the following slide. But you know, TPG, Sequoia, Amazon, you all must know that they're all in this space now. BlackRock, not just in their asset management side, so they're the largest asset managers. They've made ESG their default option, but they're also getting into again growth capital. So they have a $600 million fund with Temasek that they've set up to support growth in climate. And there's a lot of talent that's transitioning. And again, we'll touch upon this later, but we see this ourselves in our own pipelines. There's many more serial entrepreneurs from other sectors coming into the space because they see that opportunity. So this is, again, just a quick snapshot of what's happened in the last 6 months, literally. So like many other nascent sectors, climate tech has a chicken and egg problem. So the good entrepreneurs may not come to sectors where there's no visibility of either investment or exits, and similar for investors. If they don't see the right kind of entrepreneurs and exits, they may not come into that. So that's one initial hurdle that climate tech has to cross, and we're increasingly seeing trends of that, right? So as much as was invested in entire 2020 has been invested in the first half of 2021. Majority of it, a large majority of that in mobility, and food and water is the next largest that's attracted investment, right? And something I referred to earlier, there's about 1,000, and this is just in the last 12 months, is 1,000 investment firms, unique investment firms have joined at least one climate tech deal, and 50 of those have backed more than 5. So it's something that seems to be a sustaining trend. Something else we've seen on the public markets. So the big energy majors were traditionally the oil and gas guys. You know, so in the US, you had the Exxon, Eni in Italy, Repsol in Spain, and Britain had BP. I mean, has BP, of course. But they are being increasingly surpassed by their own renewable energy companies, right? So NextEra, it's a small company a few years ago, is now surpassed ExxonMobil. Enel, of course, is a diversified utility, but increasingly has a renewable focus. Iberdrola, Ørsted is interesting company that's become probably one of the major renewable heavy utilities. You know, so Enel of course has lots of other plants, Iberdrola also, but Ørsted is increasingly becoming a renewables specific energy major. Great. Now, if I can request all of you, maybe go back into the same link actually.
Can I share the screen?
Can you see my screen?
It just says quick poll.
One second. Yeah. All right, go ahead, Pratap. That's what I'm on that other one.
You just have to turn off your screen sharing.
Sorry. Yeah. If we can get back to that same slide, I'll share it again actually. Oh yeah, Rishi, thanks.
This one we're talking about?
No, the one. Great. So,
Oh yeah, sorry.
how many? Yeah, that's the question basically. So, in your mind, how many unicorns are there in the world today? So, climate tech, of course, as we know, is wide, and we're not including the companies that have started off as startups and have either listed or been acquired. So, Tesla is not included here. Impossible Foods is not included here. So, we're really talking about literally the last few years. Okay, nice. All right, very nice. Great. So, okay. So I think most of you are pretty spot on. There's about 25 unicorns that have been tabulated by this firm that tracks Holonik. This excludes, as I mentioned, post-exit acquired listed companies or even mature incumbents, right? So 25 of which 16 are in the US. They all have a combined valuation of about 59 billion. In 2021 alone, we've seen literally the last 6-7 months, we've seen 11 becoming unicorns, right? With a combined valuation of 27. So this is very interesting trends. Something that's even more interesting for us, especially coming from energy and mobility and all that we hear of in the news. That's really the agri startups. So this includes food, precision agriculture, alternative proteins, etc. Feed and nutrition companies, right? So these actually outnumber energy and transport combined, right? There's a bit of an overlap in the energy and transport. Of course, one can say Northvolt is also in transport, and you'd be right. But suffice to say that these are the trends we're seeing. And what you'll also notice is many of these companies are probably not very familiar to many of us, right? And that's the nature of climate tech, is as many are currently at least are B2B, right? So these are companies that are doing deep science, they're doing work with they're selling to other businesses, not so much B2C, which we'll see more and more in the next decade is what we expect, more B2C as well, right? Lots of climate fintech solutions, lots of data solutions, lots of consumption related solutions. So this is the start, is B2B. I think we'll see many more B2C as well. Great. Again, I'm going to share some data on what kinds of investors are actually investing in climate tech globally, right? So we have a large cohort of climate tech or dedicated VCs for climate tech, right? So for example, Breakthrough Energy, it's started by, of course, a coalition that was led by Bill Gates. But what they've done is they restructured the fund in a way that they can support innovations for a 20-year timeline, right? So that's very critical for climate tech. So that's a kind of restructuring that's required in this field. So long timelines and large impact. So they don't support anything that's below a certain potential impact level, right? So 1 gigaton of carbon is what they support. And there's a few that are following this kind of trend, right? So Pratap mentioned earlier about third derivative. So these are, this is a joint venture between New Energy Nexus and RMI. Also a very much a climate tech focused accelerator fund. They invest convertible notes. Again, it's hard to obviously value companies early stage. So the convertible note structure is something that works, increasingly being adopted and accepted far beyond North America. So we're seeing it in India and the rest of Southeast Asia as well. Of course, we have low carbon capital, closed loop partners. Elemental is another energy focused, again, started off as an accelerator, but increasingly funding as well.
And
Congruent Ventures, yeah, I was just about to say Congruent Ventures just raised 175 million of pure climate tech focused funds. Generation is a mix. It's not pure early stage capital. They do project finance as well, largely project finance, but they call themselves a one-stop shop for clean tech. Their founder has just gone to head the DOE in the US, so clearly doing something right. Sorry, Pratap,
I just add like closed loop and here in this region, Circulate Capital, we're seeing domain-specific funds. The Circulate Capital focuses on plastic waste. It's backed by FMCGs who come together to provide the capital and other support. And that's kind of getting mixed together with the corporate CVCs as well, who often are strategic capital. It's very interesting and for a powerful fit for Cleantech.
Correct. Yeah, so just leading from there, there's the big traditional VCs, right? So all these guys are perhaps known to all of us, right? And many of them are now getting into climate tech. In fact, you'll see in the next slide that many of these, even the traditional VCs have been present in more than 10 slides in the past year or less than a year. So it's becoming increasingly important sector for all of them. And then, of course, there are the foundations that we ourselves we're supported by, for example, SCD Fund and Good Energy. And these are all the foundations that are very, very gung-ho on this sector and trying to introduce catalytic capital to crowd in more private investment, right? And then the strategics, corporate VC, so increasingly becoming more nimble themselves, right? So Shell, for example, has its ventures, but it also has Shell E4 in India that's looking to scout for very early stage innovations, incubating, accelerating them so that Shell Ventures can then invest, right? So Microsoft itself, Climate Innovation Fund, Amazon, most of us know the Climate Pledge Fund, and all the others, right? Largely, some of them in power, some of them in oil and gas, but even beyond. So it's a vibrant ecosystem, right? All developing fund theses, all developing investment theses for this to be part of this space. And just moving on from that, so that's a high level picture. But the recent trends, for example, as I mentioned, so even Y Combinator, which is obviously a agnostic fund, accelerator fund, Temasek, also largely agnostic, but they've been part of many deals, right? 10 plus deals. Many of the others are climate tech focused funds. There've been so everyone that we see are SOSV, which is China based. We have Circulate Capital, Sequoia, as we mentioned earlier. So increasingly becoming more active in this space. I want to show you something that's similar as we saw for the global context, but for India, right? So there's a few funds from the other slide here as well, but we have a lot of homegrown funds that are very focused on the India opportunity, which is big, right? So Advantage, for example, mobility focus, similar to Micelio, which is mobility focus. Blue Ashwa, Peak Ventures, that are broader climate tech, but only climate tech, and very much funding a lot of interesting deals. Circulate, as we mentioned earlier, is a waste-specific fund, so it's got a very specific investment thesis, and within waste also specifically in plastic, right? Infuse was one of the pioneers in this space. Again, with the general trend, it started funding earlier a lot of the clean energy innovation, but increasingly many more clean tech and climate innovations. Omnivore, as many of you know, agriculture focus. Sangam was one of the other pioneers. Rainmatter is an interesting trend. It's set up by the founders of Zerodha. So new wealth that have made money in the broader startup boom in India, and now channeling money into climate tech. So overseas, we're seeing a similar trend. Is there's an intergenerational transfer of wealth that's happening, right? So old wealth transferring to new wealth, to the newer generation, and many of the new generation family members are very aligned, and they want to they want to align their values with profit, and are increasingly channeling a lot of their family wealth into the climate space. So we're seeing intergenerational wealth transfer happening overseas, new wealth overseas and in India that's channeling more money into climate. And of course, some of the other funds, the traditional VCs in India, but with a relatively open and strong climate focus. 314. So some of you may be coming for the talk later today. There's 2 talks actually, so you get 314's climate tech thesis, Ankur Capital, which is an impact fund, Asha, of course, multi-family office, Charity, which is IDG Ventures large, and Sequoia, as we mentioned, all are kind of interested looking at climate tech. Many of them, of course, have certain subsectors that they're looking at, mobility being one obvious one, clean energy, waste being others, right? Then similar to the other space, the other slide, there's corporate VCs. Many, of course, from the oil and gas space, increasingly wanting to kind of make sure that they're part of this decarbonization transition that seems to be inevitable now. Of course, as we know that oil and gas will remain a more significant sector in certain parts, for example, perhaps in marine, in aviation, etc. But we're seeing much quicker transition in energy generation, whether distributed or centralized, as well as in broader transport or last mile and passenger transport. And then some of the funds that, the foundations, DFIs, government agencies. So these CDC is one that's new on this slide, but that's reflective of the fact that the UK government has recently announced just over $1 billion to invest in India. That's going to be likely channelized through CDC. Eversource, which is a fund manager of the Green Growth Equity Fund. So it's by, again, I think by the UK government and India's NIIF. So yeah, that's a bit of and as I mentioned, this is all a subset of the 272 that have somehow been part of some climate tech deals in India, right? A bit again. So this is kind of drawing from the research we recently done on the report with IIC and RET. So at the high level, in the last 5 years, what we've seen is just over $1 billion invested, and this is actually an accelerating trend. We've seen 272 unique investors in 200 funding rounds, a majority in energy and sustainable mobility, right? Not surprisingly, these are the growth sectors, right? So as you can see, there's a strong growth trend, both in deals and the amount of well, the ticket sizes essentially. I just want to break it down, just spend a couple of minutes on this across the 6 kind of sectors that we have defined in the report. So energy access is huge, of course. Now, I just want to caveat that by saying that energy access investments do include the impact investments that go into capex or capital formation, while clean energy does not. So, for example, so that's why there's a big gap here. But these are the trends really. So energy access is attracting a lot of impact investment. Energy optimization, which is essentially all the solutions that support the large asset base. So these are forecasting and scheduling solutions, data analytics, even drone-based solutions, etc. Right. So these are the ones that are attracting a significant amount of interest. Will continue actually, and this will grow, we expect. And then of course energy storage, right? So oftentimes we do hear that India is a consumer of technology, and it is true to some extent, but we're increasingly seeing. But we do need to see more of this. But we are seeing fundamental and deep science R&D being commercialized. Log9 is a good example of such. So that's going to be something interesting that we'll see over the next few years. In mobility, of course, lots of funding that has gone into the manufacturing OEM side. But increasingly, we'll also see the fleet, connected vehicle, clean logistics, especially last mile logistics, that will see probably a quicker fleet transition because the economics of commercial EVs is just incredible. So we'll see a transition here as well. And then of course there's new battery technologies, charging infra components that is probably looks small right now because the scale is compared to 600 million, but this is going to be increasingly interesting sector that will attract investment. Then agriculture again. This is something that has strong overlap with agriculture in general. But we tried to kind of distill down to see which had a strong climate impact, at least across the life cycle, right? So agri inputs or anything that reduces the amount of agri inputs or increases yields, those are the ones that have attracted the most. Then of course there's organic farming and products. Now this is not obviously directly doesn't come out apparently as or clearly as a climate high climate impact intervention, but really what happens is many of these entrepreneurs are actually influencing what happens upstream and trying to introduce climate friendly practices among growers. Right, food loss reduction, it's big. I think 30 or 40% of food loss wastage happens right from harvest before it even reaches the consumer. So this is something that needs to be solved in the supply chain, cold chain, and the logistics bit, and people are trying to solve this. And precision agriculture, and this is something we expect to grow quite a bit.
All right, I think Nalin is frozen, and I can't share my screen, unfortunately, while he is frozen. Let me see, maybe I could just talk from my deck here, if we can. Oh, there we go. Okay, actually, I'm not sure where he left out, but here we are starting to see more data solutions in IoT, satellite decision making platforms. These are things that I think there is definitely a good push to leverage like AI into more solutions, not just for things like that, but we're seeing it, for example, in the solutions that are being developed for renewable energy plants, for plant optimization, all this stuff. And which is kind of surprising, but very positive is advanced new materials coming up. This does require a technology, a strong R&D base. And we do see that the government is moving towards trying to unlock a lot of the technologies that are stuck in our research institutes across India that could be very transformative. When I do see some of the startups coming out in for example, Switzerland, where I do some training, 80% at least in one program that I'm involved in, Climate Launchpad in Switzerland, come from R&D or PhD projects. And that's something that hopefully will increase over time. The R ecosystem here is a little bit kind of similar, of course, to the slide that Nalin presented on globally. You know, we have an increasing number of VCs that are climate focused, as Nalin mentioned. Our startup ecosystem is growing as well. There are more angel investment groups that are investing more and more into Cleantech startups. I saw a recent battery swapping startup, I think 3-4 days ago, announced by Indian Angel Network as well, and more of the traditional VCs that may be traditional here in India, but for example, Sequoia as a It's a leading climate tech investor globally in India, still starting to grow in clean tech. We are seeing a lot of traditional VCs ask and ask us for deal flow for their own interest, as they do want to participate in this nascent but very fast growing ecosystem. And of course, the support ecosystem is growing. Social Alpha is a key player here. We have been involved for several years ourselves as Climate Collective with our partners UNG Nexus since 2016 as well. And we have seen, in addition, more corporates take interest in the clean tech startup space. In fact, I remember a recent call with one of the big auto manufacturers, two-wheelers, I think they mentioned they invested in 5 clean tech startups, to help their business as well. Nalin, you're frozen. Are you back?
Yeah, I'm back.
Great.
Yeah. Great. Sorry, I lost internet.
That's right.
Sorry, guys. All right, so we've gone through this. As Pratap mentioned, pretty vibrant ecosystem beyond the investment ecosystem, which is of course critical because that's what builds up pipelines and leads to great investments. And we have ourselves work, of course, in acceleration, increasingly trying to bring in more angel investment into the space so that the VC ecosystem can come and support it for growth. So this is, I'm not sure you can see this very well. It's too small, but this is just to show you that this is a widely distributed ecosystem across many urban centers and largely urban, in fact. Bangalore does have the largest number of climate tech startups, followed by Delhi, right? And there's of course there's general correlation between the number of startups, the number of labs that can support them, the number of accelerators, incubators that build up early stage pipelines, and the centers of excellence, that exist in those cities. So it's interesting, and this is something that I encourage you to kind of dig down if you're interested in. It's part of our report, actually. But yeah, I mean, this is something that in India we do need to kind of, as ecosystem supporters, also try and reach out actively to the non-metros, to the what is euphemistically called as the tier 2 and tier 3 cities, but we're seeing increasingly many more innovations coming out from that. Right, and I'd like to share, of course, some things that we are seeing ourselves. This is very much our own perspective. Having been in the space, as Pratap mentioned, in this clean tech space for 11 years, but specifically supporting startups for the last 5 years, right? So we've seen large and growing accelerator pipelines, right? So over 3,000 that have applied over the last few years, and this has grown, right? So the trend is growing. Broadly, a third of the early stage startups that we see and that we support are in energy and mobility, a third in circular and waste management, and a third in consumption and resources, right? There's a large asset base. We're the 5th largest market for both solar and wind in the world. And so there's lots of service models that are coming around to service these asset bases. As mentioned, drone-based, O&M analytics, forecasting, scheduling. There's lots of business model innovation. You've all heard of, for example, the RESCO model, IPP. I mean, third-party ownership in solar. We're seeing more and more of that, for example, in energy efficiency. There's some business model innovation as well. Growing investments from India-based corporates and investors, as we mentioned, there's dedicated VCs, but also the traditional guys that are having climate tech theses. Both energy and FMCG, for example, corporate VCs and deploying capital, and well, a growing number, still small, but perhaps a growing number of corporates that are making public commitments to either transitioning to a complete renewable energy supply or reducing their climate impacts by being part of these global public coalitions. And something I perhaps mentioned earlier also is we are seeing lots of serial entrepreneurs from other sectors coming into this space as a serious opportunity, right? And job seekers. So we've just had a climate jobs fair, second big one in 2 years, and yeah, the hiring activity amongst climate startups. So by the way, this job fair that we did was specifically climate startups hiring, so not the big guys hiring for their climate divisions or their sustainability division. So we've seen over 100 jobs that have been advertised, and many more job seekers there as well. Right. So quick overview of deal landscape. Again, I don't want to spend much time. I'm also mindful. So these are just a smattering of the top deals by the amount that have been infused in these companies, right? So we have a lot of mobility companies, but also a large chunk that has gone into a couple of waste to resources companies, largely driven by circular capital, Avishkar. So significant amount of funding going into this. This should increase, and as you can see, this is very recent as well. So it's not just the larger deals have come very recently. So this is an increasing trend. There's other recent deals that have happened literally this year, right? So energy optimization, food, energy as well as air pollution. So yeah, so there's quite a bit of activity we're seeing. Just to give you a sense, of course, this is a question we are often asked: is what are the exit pathways? One, and are there examples of good exits? Now, the honest answer is there's not been too many exits in this space, right? There have been a few, but that's true for any growing sector, right? And I just want to talk for a few minutes on two of them. Ampere, which was acquired by Greaves Cotton. They had a Series B round before they got a strategic buyer in Greaves. Raised about 40 million, and they are OEM in EV manufacturing. Zenatic started by three founders out of I think all from IIT Delhi. Raised just over $1 million before they were bought out. Did a strategic buyout where Hero, I think, bought out their investors, but the founders all stayed in and are very much invested in the company themselves. So, two examples of exits so far. There's a few more, but I just want to highlight there are. All right, good. So this is something we wanted to open up the floor to, but unfortunately, this being a webinar, we can't have an actual verbal discussion. But if you want to maybe just add in chat some of the interesting climate tech startups that you've come across, we can maybe have a quick discussion around that as well. So please go on to chat and let us know if there's any interesting startups in climate tech that you've come across. Blue Smart, that's right. So yeah, so they're like the EV. Yeah.
We just maybe have to make a call on time. I don't think we'll get through. Maybe we can either we can save on the business models.
We have an hour left, I think. Vedant, if I'm right.
Yes, we have an hour left. An hour and a half, actually, but.
So we. Okay,
maybe we could also take a break. It's a long session for 5 minutes and then come back. We're going to 2 hours.
Yeah.
Yeah.
Chakra Innovation, Loan, Prime Rail, Electric. Lifecycle Manager for ET.
Nice. Yeah, Chakra's seen a lot of support. And actually, one interesting thing that came up in the discussion on the energy panel yesterday by Varun was that there's in the ecosystem, the financing is being put in place. The entrepreneurs are coming in. Now, where we need much more movement is actually on the demand side. Is basically to say that the corporates need to kind of, and this is the entrepreneur speaking, is the corporates need to uptake much more of the climate tech solutions. And Chakra, I remember, has been relatively successful at deploying the solution, because they're solving something that's so visible is pollution in many ways, and people realize there's regulatory pressure as well. So all interesting. Iron, of course, we've seen funding go into that. Green pod, that's right, very nice. Cool. So Vedant, maybe a good idea for a couple of minutes break. Everyone wants that?
Yeah, we can do that.
Past, so we can come back at 15 past.
Yeah, for sure. We can take like that'll be like 6-7 minutes. That's fine. Perfect.
All right. See you guys at 11:15. Right. Good. So what we're going to do is just we'll spend a few minutes on something that we also realized during the course of the last few months of research, is what are the outlooks across different sectors. And then we'll dig down and do a little bit more of analyzing certain business models that are emerging and examples of companies within those business models. So that should be interesting as well in terms of outlook. Right. So again, 6 sectors. I'll take the first 3 first. So in the energy space, what we're likely are solutions that solve for an increasingly distributed and decarbonized energy system. Right. So these are, for example, smart grid solutions, anything that helps us manage energy flow better. DRMS, which is essentially distributed energy or distributed energy resource management systems, virtual power plants, anything that improves safety and reliability of electricity and energy systems. Energy efficiency, both products as well as energy efficiency services. Energy monitoring, data analytics, again, some of the things we've already touched upon. We should see much more growth in, for example, building energy management systems, power plant management, forecasting, scheduling solutions. Right, there's a big government push on hydrogen increasingly, as you may all have noticed, so that should be an area of growth as well. And in general, process optimization, right? So waste heat recovery and similar solutions should find a lot of backing in the next few years. In mobility, the trend is to solve for shared and electric future, right? Which means energy storage management, shared and connected fleets. So not just for consumer, but also last mile and corporate fleets. Again, we'll come to a few examples right after this. Charging infrastructure gaps, right? So this includes both on deploying the infrastructure itself, but also making sure there's interoperability, there's access across all kinds of different vehicle types. Vehicle platforms. Vehicle platforms is another way of saying the vehicle themselves, but there's a trend towards using essentially the underlying chassis, as it were, for want of a better word, with the power plant, and being able to essentially design various kinds of vehicles, both for passengers, last mile, and different end users. So that's increasingly growing trend we're seeing. And then financing solutions, of course, for simplifying adoption and use of these vehicles itself, right? So end user adoption. On agriculture, again, some overlap between agriculture and smart climate agriculture, but essentially we're trying to what people who try to solve for is an inefficient supply chain and a growing protein demand. Both of these have massive climate impact, of course, right? So food loss reduction, improved production, which means either improving yields and or reducing the inputs. India as a country has a growing aspirational class, growing affluence, and some natural outcome that there will be greater meat demand, protein demand. So there's a big opportunity here for alternative proteins, as well as introducing nutrition and feed products, right, for new raw materials. So we're seeing actually within our cohort as well, we see companies that have alternative feed. For example, this company called Loopworm that was doing like a fly based transformation of essentially food waste into animal feed. And then finally, blended finance solution. This is both for example, improving adoption of ND solution by growers, but also to support some solutions which may be capex heavy.
There's a
I think my videos will stop by the host. Yeah.
There's a great,
Okay.
I was just going to say, there's a great solution by a friend of ours, a electric tractor, something that was developed actually out of the US, although he's from Hyderabad, and tested here to solve, of course, many problems, but in addition can provide a source of electricity for homes or several homes when it comes back to be parked at night. So I think there's a quite exciting space in agriculture around climate as well.
Yeah, I agree. Just Pratap, let me know if I'm breaking up. There may be some. Cool. All right, the next few interesting sectors, for example, in waste, to solve, of course, as we know, basic problems, right? And some solving more complex problems, but the basic problems, collection, segregation, reuse, recycle, have to be solved, right? So a lot of these technology data-enabled solutions in extended producer responsibility, credits, end-to-end tracking. We're also seeing, for example, exchange platforms, e-waste exchanges, etc. Right? So we're seeing many more of us, even among the cohort that we support, recycling, upcycling, and aggregation, especially, right, that can aggregate from large producers of waste, large organizations. On natural resources, again, a big sector. We have, as everyone knows, a lot of cities that are amongst the top 20 in the world. It's not a proud fact for India. But entrepreneurs are trying to solve for that, both indoor and outdoor, driven by regulations, right? Water treatment, conservation, it's a big issue. We keep hearing of cities that get flooded and face droughts in the same year. So it's a bit of a coordination problem, infrastructure problem, but this is something that maybe also be able to solve with some innovation, right? Now, direct carbon capture is not something that we see so much of in India, much more overseas, but we expect to see the overseas companies coming in and setting up their base in India, or India-based companies doing this much more. We have a large industrial base, a large thermal power plant base that needs to kind of continue producing, but at the same time make sure they're cleaner. And the cross-cutting innovations, right? So these are the data-driven fintech solutions as well as the material solutions, right? So again, we've seen, for example, companies that are able to leverage GIS and geospatial data to, for example, improve agricultural yields, predict flooding, and also map pollution, right? So lots of solutions like this. Climate fintech, again, a growing area. It's very early stage in India, somewhat obviously to do with the banking regulations, etc. But this is especially on the consumption side and the B2C side, they should see a lot of growth in the next few years. We're trying to do ourselves a climate fintech convening in the next 2 weeks, and please look out for that. And advanced materials, right? So across energy storage, higher performing materials for process, heat recovery, etc. Great. So now let's get into what kind of business models there could be, right? Now, all of this is very illustrative. This is not intended to be comprehensive in any way, but just to share the kinds of climate tech innovation, right? So when we say climate tech and clean energy, for example, we don't include, for example, IPP, the independent power producers, right? The ones that deploy large amounts of capital. So what are those, right? So I still have included the Resco bit, which is companies like Fort Bartlett and Frey that are doing, of course, deployment of solar, owning the assets, selling power. So they are energy services companies, but they're also trying to play aggregator roles, right? Demand aggregation through technology, right? So there's some interesting models coming out of there. Microgrids, as we know, so energy access is an important sector, but there's a very strong overlap between what off-grid companies do and what they can also do in microgrids. So microgrids could also come into, for example, housing complexes, industrial parks, etc. Right. There's not too many BRMS companies in India right now, and I've included it here specifically to say that there's a big opportunity. We literally had a roundtable with 7 Indian electric utilities day before, and we are some of the largest in India, and they've all mentioned this as being an important area that they want to see more startups in. Fintech, right? So we're seeing much more fintech on the renewable energy side. So this is largely to support project finance, right? So Seekers, that's actually NBFC, Medofin, that's the solar financing platform, Green Funder, that's for green SMEs and project finance as well. We'll extend climate fintech beyond RE fintech, right? But this is just to show that there's the kinds of companies that are already coming in India, right? On the O&M side, then specifically plant O&M, data analytics, drone surveying, right? So Precinto is one company that does data analytics, some level of forecasting, scheduling as well, and the other companies that are doing drone-based mapping. So, for example, in a solar plant, right? Yeah, when we used to do solar, it was easily the fastest turnaround of a rooftop solar proposal used to be 2 days, because if the site was in the same city as you were, you have to send someone there, take pictures, do the mapping, get the blueprints, do the design, and come back. So that's now much quicker, right? Even for large plants, for example, we used to go, and this is as recent as 10 years ago, we used to go and obviously map manually using GPS devices. Now this can be done much quicker, much more inexpensively by drones. So in site selection, in construction monitoring, and in O&M, right? Finding heat spots, etc. So this is a growing field. Even in wind turbine management, this is reduced costs drastically and actually increased accuracy as well. Again on O&M, plant O&M, on the cleaning bit, we have companies that are essentially doing automated or robotic cleaning, reducing the amount of water that is needed. Many of them have secured significant funding. Actually, all of these guys have secured some level of funding to do this, because again, large asset base to support scheduling, forecasting, Reconnect, which was acquired by Renew Power, and fuel cell solutions. So there's a few companies here. The one that we know of is H2E, someone that we've supported also through our accelerator. We'll probably see many more of these given the push, right? There's a possibility, there's a likelihood, in fact, that much of this technology may be imported at the beginning at least, but we will see increasing growth in this space, right? So that's on the clean energy, but kinds of business models that we've seen, not illustrative. I mean, not comprehensive, sorry, illustrative. On the energy optimization side or smart grid side, the energy B2C companies in the space. Actually, it's a good example of B2C company. They're doing DC fans basically, and this gets them the opportunity to come into many more sectors beyond fans as well. So brushless DC motors, energy storage, and also stepping into Pratap, am I okay?
Just a 3-second gap twice, but
There's a 3-second.
Yeah, twice
Okay.
happened.
Okay, got it. So okay, thanks. So on energy storage, as I was mentioning, it's a mix of electric and thermal energy storage companies that we're seeing. Right, Tesol is doing cold chain, Infigold is doing cold chain, Ion is doing electric storage. Waste heat recovery, again, so this is Promethean is one that was increasingly doing work in the agri cold chain space. Energy monitoring and control, many companies here. Equilibrium and Genetics, one of the older guys, have been around. Companies that Equilibrium at least was supported by Infuse very early on. Smart Joule that is increasingly gaining traction, Sus Labs, Minion Labs, Avrio, that are doing energy monitoring control at various customer types, right? So some of them at commercial industrial segments, but for example, Sus Labs and Minion Labs also doing it for homes, right? Very interesting solutions. The demand side management, demand response, we have a company, AMR, again, a very interesting solution, at least for DSOs, grid operators, basically. Smart meters, so HFIL Technologies, again, a company that we are going to be supporting this year. Smart meters is at varying degrees a very high priority area for many discoms in India. Some of the private discoms we've heard saying that it's a top priority, while for some other sectors, I mean, for some other states, it is a low priority when they try to modernize their grid. And grid management, of course, Power Easy, one of the leaders in the field in managing grid safety, and Tech Uncorked as well, similar. So that's on the energy optimization bit. Mobility, many more startups than are here. Exist, many more business models also, but just to share that, of course, on the manufacturing bit, there's companies that are focusing on the last mile commercial segment, right? All to green, EV age, self-propulsion, that's, oh, sorry, you may have heard of. There's the passenger side, kind of dominated naturally by the existing guys. So we know that Tata and MG and Mahindra and all are releasing their cars, but a few perhaps of examples of startups that are coming into the space as well. Many more, for example, in the two-wheeler space, also many known names here, Ather, Ola, Tork, Okinawa, etc. In battery technology, we have Log9, Ion, Gigadyne. There's battery swapping, charging infra, right? So battery swapping is an interesting business model. Some questions here on interoperability and standardization, but all being solved. It can only be solved by doing. So that's happening. Battery management systems, also creating what they call operating systems for battery management systems. And then, of course, connected vehicles. So we have fleets, self-drive or sharing fleets, as well as rental taxis, right? So in this, there's both B2B. So Lithium Urban is one of the largest corporate fleet, EV corporate fleets in India, Triple E Taxi being the other one. And someone on chat mentioned earlier, Blue Smart. So they're a good example of electric fleet B2C company. And a small but growing component, a portion of this of business models is EV components. So building for the OEMs, basically, right? So that's mobility. Some of the other business models that we're seeing in waste. Alternatives to plastics, biodegradable alternatives. Lucro is a prominent company in this. Recycling, again, these are companies that you may have heard of. As you can see, there's companies that are across several types, and which is understandable given that lots of these are cross-cutting, right? Digital marketplace, there's EcoX, there's Southern e-waste exchange, etc. that also are increasingly managing in the EPR and the e-waste regulations. And then there's waste to value, for example, in food or fuels, upcycling, etc. Right? So I'd encourage you to look at all these, see what you find interesting as well. All right. So Pratap, maybe I'll hand it back to you for this section.
Great, thank you. So there's I hope you're starting to see this is quite an exciting space. It's still an early nascent space, but the growth has been relatively phenomenal, both globally as well as what we have seen in the last 5 years. So how do you find these deal flows? It's actually amazing. Sometimes investors have come to us and said, we want to invest in clean tech, but we can't find them. And we're on the ground, as I think and Nalin mentioned earlier, we run a lot of startup accelerator programs, and we do get, I think, something like 200 plus Cleantech startups in our accelerator each year. We see a lot of startups, but they're not quite at the stage. Sorry, your screen. I'm just using your screen, yeah. Where it gets into investors' radar as the angel investors, and especially through networks, have increased the size of investment from earlier days. I think we were closer to 50 lakh to starting to look at 2 crore and above. There is a disconnect, but we are seeing more and more, for example, accelerators come up focusing on Cleantech programs, still small but growing. We do have an angel network ourselves, and this is perhaps a good time to put a plug in. If you're a angel investor, do come to our Climate Tech Investment Summit next Monday. I'll put in the link here. It really is aimed to solve one of these problems: how to find clean tech quality deal flow, clean tech startup deal flow, as well as how to find more angel investors who work together and also work with follow-on funding partners for much better outcomes. So we are starting to see as more and more startups, clean tech startups come out, that the angel networks are becoming active. I mentioned, I think, can't remember the name, but even 3 days ago, IAN mentioned an investment into a battery swapping technology as well. Now we do make a distinction here with TBIs, technology business incubators, and AICs. But any of these are those what those terms mean. Those are very similar to accelerators or our startup programs in practice. There is funds coming up, of course, and some of them, of course, have come together to syndicate and look for sharing deal flow with others. I think this is still early stages beyond the angel networks. A few have already set up, of course, and our own fund that Nalin leads, Climate Seeds, aims to actually catalyze this issue of bringing early stage capital and bringing in other investors to other investors as well. So the short answer is, it's there. If you look, you just have to make the right connections, find the right platforms. But as we'll see, these will self-organize because there is a bulge of startups at early stages coming to the market, and many of these will increasingly look to raise early stage capital.
All right. So let me do this. All right. Can I just stop sharing for a minute? Let me try and change my Wi-Fi. Just a minute. Okay, should be fine. Right, should be fine now. All right. So in this section, we'll try and just go through an exercise. But before that, just want to kind of share this simple question, right? Does climate tech require specialized technical DD skills or expertise, right? So the short answer can be derived from here is that typically climate tech comprises of high technology solutions. Oftentimes it's a multiplicity of technologies, right? So you have system integration that's required. It's oftentimes hardware, right? All of this needs to be tested, validated, sales cycle are longer, and often more stringent because it's B2B and B2G procurement processes, right? So all of this combined means that there is actually a need for specialized technical evaluation.
You want to share your screen again?
Yeah. I'm sorry. So yeah, I was showing you. Yeah, this was what I just mentioned. So this is the kind of the startups that we're dealing with, right? So high tech, multiple technologies, and more stringent procurement processes. All right. Now, in terms of how we can kind of look at the journey, as it were, of a climate tech startup, this is probably a good representation in a way. So, of course, that early stage, even pre-startup ideation stage, right? So we're trying to kind of even validate the idea. Forget about validating a solution. We're trying to see if there's a there's even an idea that can be built, right? So, I mean, of course, I've mentioned there's investment risk, but really, of course, there's very few investors that come in at this point anyway, right? At this point is when, the idea is launched. Maybe you incorporate at this point. You're trying to kind of get the right problem solution fit, and you're at early stages of finding market fit, right? Business model also is trying to be is being put in place. So this is where some of the early stage, for example, grant funding could come in, or some even angels come in when there's strong conviction around what the entrepreneur is trying to do. It's in that 10 to 40 lakh, 10 to 35, 40 lakh range, depending on how much capex is required to even test something out, right? Post that is when you try and validate the technology, right? So you've developed a product, but you still need to test it in real world conditions. So you're probably beyond TRL4 if some of you use TRLs. Market fit is still being defined. The business model is being refined. We may get to 20 to 70, 75 lakh, 80 lakh investment sizes, even beyond. So these are not prescriptive numbers. These are things we see, but it's different for different kinds of solutions, even different kinds of investors, right? So once you've done pilots, so for example, what we do with Electron Vibe is we try and pair startups with discoms that are able to support their pilots, right? So once that is done, there's the possibility or the probability of deploying your solution at scale increases, right? Because you've demonstrated the viability and the utility of your solution, right? Beyond that, you come to market, trying to reach market validation. So you've validated technology, you validate your product. So you're gonna make sure that the problem solution fit is right and the market fit is right, right? At this point, you want to come to a space where you can do a repeatable process, whether it's on sales, whether it's on manufacturing, whether it's on installation, system integration, the right SOPs in place, right? So that's what things start. These are the kind of things that start being done at this point, right? And then you start to gain traction, right? So this is early growth. So you have some credibility in the market. You're trying to reach operational efficiencies. Problem solution fit is well defined at this stage. The market fit is well defined. You're going from repeatability to make sure you can do it at scale. So you may be doing it in Bangalore, and you want to do it in other cities. Eventually, you want to do it even overseas. You find Vietnam is a good market, for example. And then beyond this is, of course, mature growth, and where a lot of venture capital, or Series A comes in. Is when you've reached significant traction. Most of the things that you want to validate early stage have been validated. You even optimize your business model. Of course, there's stuff you can still do, right? So keep in mind, this is still early stage, right? If it were not early stage, our mature would not be million and above. It would be even beyond, right? But we are still looking at early stage climate tech investment. So this is what the early stage journey looks like. Right. So let's look at a subset of this, which is these three stages, right? The pilot, early traction, early growth stage. Right. Here's a framework. Again, this is neither prescriptive nor comprehensive, right? But this is one framework that can be used, for example, to assess early stage climate tech startups, right? So we want to assess several things, right? The problem solution fit, the market fit, the business model, whether it's workable, the technology, any IP issues around it, the regulatory issues, of course, team. Nothing as important as team, right? The financial and legal aspects on DD, of course, right? We are not going to be looking at financial DD, of course, in this example. So let's look at the others, right? So here's a table that tells us what is needed what kind of expertise is needed in order to assess any of this for climate tech startups, right? So at all these stages, you do require a high level of expertise because the uncertainty around assessing any of these is high, right? Given the stage of startup, given the kind of startup it is, right? There's high uncertainty at the pilot stage in assessing problem solution fit, market fit, business model. So you need to understand that segment. You need to understand that solution relatively well, right? And when I say you, it's not you per se, but you need to have the supporting infrastructure around to make sure you can tap the right experts, the right technical organizations to be able to assess this, right? Similarly, some of this reduces as startups progress along the journey, but there's still a significant amount. Keep in mind, we are still talking about early stage, right? So leaving everything else aside, we can also now start to think about how to assess these three things, because these are the more, so every investor, for example, will have their own ways and metrics to assess the team. The regulatory assessment methodologies may be different, the problem solution may be different, but again, to illustrate, let's try and see how we would assess market fit, business model, technology IPs through a set of questions that a technical expert may ask. Right. So let's look at one example, right? A generic example of a company that provides battery swapping services around lithium battery technology, and specifically for electric rickshaws, right? So what kind of questions would need to be asked? Again, these are preliminary questions. The actual DD will be much deeper, technical DD, but the kinds of questions that you would need to ask, or the technical expert need to ask, is understanding deeply the supply chain, right, for lithium batteries, right? Understanding whether the supply chain has domestic components or is entirely important, because that leads to many other risks if it's entirely imported, right? Now, once it's in country, if it's imported, what does the local service network look like, right? Is the ability to service and repair, or is it always a replacement game, which has an impact on your financial model, right? A deeper question is, how reliable are these batteries anyway? I mean, it seems like a basic question. Everyone's using lithium battery. You have a lithium battery sitting on your desk right now, right? If you own an electric vehicle, you probably use it, but still, it's a valid question. And the people who are doing deep science stuff are asking this question: Is this the best for the next 10 years? Are there other technologies, other materials that are better, right? Are there, and lithium ion itself is a broad term for many lithium compounds that exist, right? And that ion energy storage. So, which of them are more suitable for which end use case, right? So this is a kind of deep dive research that you would need to do if you're actually investing, right? What is the 5-year roadmap of battery technology, right? Is lithium going to be dominant? Is there other technology that will come into play? If they do, how do I mitigate this, my investment risk, right? What is the competitive landscape in India, overseas? What are entry barriers? What are the moats that we can build around, right? So that's, again, this is simplifying a lot of things. What we've done is literally distill a business model into one line, and then within that one line, break it up into components and then ask the questions, right? This will be much deeper, but let's go with this for now. Now, for battery swapping, right? Cross-platform compatibility issues. Everyone has. There's especially electric. So we know it's a fragmented market, unorganized in many ways. Even the charging or the charger connections are different. The battery state of charges is different. The technologies may be different, as I mentioned, the different compounds, etc. So are there any cross-platform compatibility issues, right? How do you mitigate any damage, right? So you're giving out a battery to someone to use. Do they give you the same battery back, or do they give you a low quality battery? You don't know. These are real problems that happen, right? In India, how do you mitigate for those? How do you know if there's damage, even if they give you the same thing, right? How do you know that they are not charging it in a non-optimized way? And that has a direct impact on your financial model, because batteries, as we all know, have a limited charge cycle over their life, right? What are the key drivers of this business model, right? Financial drivers, technical drivers, etc. Then trying to understand the electric rickshaw space, right? Again, supply chain issues. What is the domestic service repair market look like? Is this sufficient? That you have to go to a centralized hub and spoke model? All of those things. How will these vehicles evolve over the next few years? And what is the implication for my model? How does the swapping station need to change as a result, right? Is technology obsolescence a factor, right? And how do I address those, right? So it does require some level of specialized knowledge, some domain expertise, and yeah, and there's several ways to solve for that, as I mentioned. Having an internal technical board could be one. Having access to global networks is another. Having local, having access to local technical experts in labs is another, right? But we do need that definitely in the space when we're doing BD. All right, so Pratap,
Right.
back to you. I'm going to stop sharing, right?
Yeah. Let me see if I can. Thanks. That was great. I mean, there's so much here, of course, that we can't cover in a masterclass. But we'll share a link for those who are. You can see my slides.
Yeah.
So we'll share a link for our Climate Tech Investment Summit next Monday that we're hosting. It is invite only, so you have to be an investor or you have to be someone who's from the development world who supports investment into clean tech startups. But after that, we are going to launch a 8-week program for investors and those interested in investing in clean tech as well. I'll share that type form as well. I mean, this is a key question. I know that there was a lot of information shared in one way here, and I think we do have a mixed crowd here. I think I saw a lot of ISP students, at least looking at the emails, and then some people from organizations as well. If you are an investor, and if you're not and you're interested in investing, what are the key things that either you feel are roadblocks to investing in clean tech? It's not an easy one to look at clean tech, especially if it's new. I did see someone pop in returns. It's a good question. You know, what are the returns in investing in clean tech? In fact, gestation maturity, right. I mean, look how fast you can put an app and get 50,000 downloads. We can't do that in clean tech, at least in most clean tech businesses that are not consumer oriented are not. Lack of precedent deals. I think you're saying because of the nascency of the ecosystem. Absolutely. Gestation again. User acceptance. Is this something that investors and government and others are pushing, but it's not of interest? I called a friend of mine in Paris once because I thought they're leaders in clean tech. He's a very knowledgeable person there. And I said, it's amazing what you're doing in France to support climate. And he was like, well, I don't know what's going on. And I'm not sure it's really relevant to me as a user or consumer. So this is a global problem. It does take time, and maybe more so here in India. Context-specific, expensive solutions. That's kind of interesting. I think you mean, perhaps you're saying from the consumption side, there's a premium to it. Consumer education, right, and that should scare investors. Wait, I have to build a solution and also increase consumer education to buy my product? That sounds pretty scary to me. VC being the right instrument. So we get a feel, of course, there are lots of challenges to investing in clean tech. Part of these is because, of course, it's a nascent industry. Clean tech is the recent boom, I should say, is only, let's say about 3-4 years old. Clean Tech 2.0 or Climate Tech 2.0. The other thing, of course, is we bring to clean tech our worries and problems, our beliefs. For example, when we started in solar, most people said, yeah, that's great. The CSR should support it. And we had a subsidy from SECI, and we were offering power below the grid, right? And although perhaps none of us could predict how fast solar prices could fall, we all knew that at some point it would fall below the grid. So we were not there to support a CSI project, but really try to sell a client a solution to help him or her save money. Right. So this basically baggage is something we have to deal with. We have done a lot of research here as well. As our angel network has been built up over the last few months, as we go and continue to reach out to more investors. We do target actually angel investment groups, not individual angels, as well as follow on VCs and corporate investors. Let me see if I can share this slide. Yeah, you can see my screen. I think we may have already shared this, but these are some of the. This came out of research done with lots of angel investors, investor groups, etc. Lack of quality deal flow, and I think when we asked this, one of the things that people mentioned at the beginning of the presentation as well. Part of the problem here could be, of course, technical due diligence at what Nalin just went through. In fact, in Philippines, one of the angel groups said, we have this great plastic waste technology that we're exploring, but we have no one who can help us understand the technology, validate it for us before they open up to their investor network. And that is something to be solved because a lot of these are new technologies. Most angel groups are not Cleantech angel groups. That's something that's the vast majority in the minority. So you have to figure out how to do this. Some groups here, of course, our angel groups, what they do is they look in their members for someone from the right background, industry-wise or sometimes technology-wise, to lead deals. This is great. This is the right way to put syndication together, but it may not always exist, and definitely doesn't always exist in all the angel groups that could be looking at Cleantech are getting access to more Cleantech startups. And so related to that is, as I already mentioned, technical evaluation. There's a lot of uncertainty, of course, in certain areas, especially like in waste, about policy uncertainty or just a general regulatory framework. That's something that does need to be looked at. When we started in solar, as developers, RECs came out, and then something called RPO, renewable purchase obligations. States had to buy these RECs. Then we were waiting, and states asked for extension. So sometimes, even when the policy is moving in the right direction, does not mean that the business or the business environment will improve necessarily as well. Other things, of course, a lot of our solutions, especially in areas like, land, water, waste, air pollution, lake cleanup, does involve working with the government, and this is both hard in and of itself because it does take time. The government has been proactively moving, for example, to allow more startups to of course, bid for projects without requiring the old days, those balance sheet requirements we all used to suffer from. That's very positive, but this is also challenging from investment because it's unclear the scalability of these business models of being reliant on government for growth. And maybe one barrier, but this could be a reflection of the nascency, is the limited set of domain specialized investors. So we have seen, for example, deals, across the region where they look beyond their borders for someone in Cleantech, both as a signaling that someone in Cleantech can join the syndication, as well as, of course, their networks may not have the right domain knowledge or experience investing in this domain, even outside of that country. So these are things that I do believe can be solved, and people are solving them slowly over time. Our angel groups are investing in Cleantech. In fact, one of them told me last year, when we were chatting, this is one of our big angel investment groups. The number one focus from the members is sustainability. And if you've been in Cleantech, this is shocking to hear. And it is being matched by what we see in terms of their angel members investing into startups, as well as their own internal fund investing into startups, has a significant or even plurality or majority, or I should say plurality of startups investments into Cleantech startups. So these are some of the barriers. Now, this has been a long course, discussion. It's mostly been a lot of information sharing with some kind of a look in particular on the difficulties of investing in Cleantech, looking at, for example, the technical due diligence. There are other questions like, for example, how do you create these syndications? Where do you find Cleantech investors who can join syndications? We got one of the big VC funds here, kind of very interesting. They're not Cleantech focused, but they have a big sustainable consumption, or consumption focused, domestic consumption, and there too, sustainability is a key factor. But they had suggested that even the presence of a Cleantech investor, much smaller, can help even larger deals like Series B. Space could be opened up because there is such a need for specialized domain experienced investors to join investment groups, even if it's at a very small stake. So I think that it's probably good for those who are either existing investors, but as well as the students here learning. Maybe we can just open this up to Q&A. Any specific questions? I think we both have answered some questions in Q&A over the masterclass. Let me stop sharing my screen though. Okay, there are some questions. It's coming in the chat. Maybe this is something you want to answer. To save some time. You can see it. Which
the Q&A, I think we want.
Oh, in the chat. Which sub-segment with a pay-as-you-go model?
Yeah. Okay, so he actually asked this on Q&A as well. So yeah, this is typically, pay-as-you-go is typically under clean energy. Depends, right? So pay-as-you-go is typically in the rural space. So it would be energy access or clean energy. Now you could have microgrids that are not pay-as-you-go, that are in industrial parks, etc. Of course, so then it may also be a smart grid solution or energy optimization solution. So depends. I wouldn't, by the way, worry too much about classifications in general. Suffice to say, as long as you are within this taxonomy, that you can, I mean, from entrepreneurs' perspective, you can access funds that are directed at climate or clean tech. And as an investor, of course, you have your own fund thesis, and you can see if it meets that.
Right. One thing we didn't cover here that is interesting is that there is increasing interest in gender and impact. There's a lot more funds dedicated to this, and especially also a lot of the LPs and later on stage funds have this or something like this as part of their objectives, and it's something that both startups should start to look at, especially as many Cleantech startups do have a gender impact. And if you're an angel investor, even though it is not your main concern is returns, which probably is the right way to look at investing, of course. But you should be cognizant of this fact that follow-on investors will have this to some degree as an objective, and one way of aligning with follow-on investment is to think about helping your investee companies build the data collection systems, or surveys needed to build this story out as well as your investing company goes to further rounds of funding.
Okay, we have two questions which we can take verbally. So Subranil, World Bank, for early stage, based on experience, how is the financial analysis, including future cash flows, for climate startups differ from other entities? So you talk about DCF analysis presumably for valuation, right? Subranil. Yeah, so I mean, it's very hard, right, for early stage because you don't have the data clearly. What you have data for is the team, it's quite bluntly. But yeah, so you have to make the right kind of assumptions. So that's what we try and focus and tell even entrepreneurs is focus on kind of making the right assumptions. So even if they're guesses, they need to have the right kind of basis, right? So the assumptions are as important as the analysis themselves. Very few at this stage use DCF or any similar for valuation. So that's you asking.
A lot less scientific, or doesn't mean it's not sophisticated. A lot less quantitative, as you would expect when large amounts of money is coming in. There are a lot of bets about trends that you can't easily either back up. You know, let's say this startup will have this trend and hence investment. There's technologies you're making bets on multiple things at the same time. I think oftentimes, if I hazard a guess, LPs back teams who have views or insights about this, not necessarily financial skills, in particular like DCF. In fact, you know, we do work in the early stage sector, and of course, late stage. If you're at Series B, Series C, DCF and it will become much more important because, of course, you're really trying to accelerate cash flow, you know, and revenues and cash flow. In the early stage, it's really backing teams who have insight in where the world is moving, how adoption will increase, how maybe regulatory environment will increase as well, but not so much on the modeling side. Yeah.
Great. Geeta is asking, on what parameters do you assess a startup? Only ROI, also impact? If impact, what are the parameters on which you assess impact? Pratap, you want to go on this first? And then I can go in.
I can just add one is, and this is going to be unfair, maybe too much investment community, but it's not meant to be generalized, but a first rule of thumb for a commercial VC is returns. Right. Now you can see that maybe because it's by the way they look at questions. You know, this is not true, maybe less true for very early stage grants and very certain special vehicles that have come up. But this is true in other impact areas. We've seen great VC funds looking at bottom of the pyramid, focusing on returns. Right. Now, impact, of course, does play, but I think it plays in another way, kind of an exclusionary way, or at least creates a subset. Are you creating impact? Yes or no? Like, for example, we know of, for example, gender-focused funds, right? Once you have once you cross that barrier that it is perhaps significant, I guess the considerations become largely returns, and vice versa in the Cleantech side. When you talk to people investing in Cleantech, the discussions are not really as much on the size of impact, and for many reasons. Impact comes from scalability, and scalability is correlated with returns to a large degree. So rather than the, you know, so I think it kind of inserts itself to some degree. In our programs, for example, we do talk about, as an example, Ola being one of our biggest circular economy startups. No one's ever used Ola really that much in terms of circular economy, but what does it do but reshare assets? You know, so sounds pretty circular to me, but the investor community perhaps has really focused on the commercial angle. And if we believe as an impact investor that it's scale that we need to have impact, in fact, our correlation returns is pretty good. Maybe we think about 3 more questions, just for time.
Sure. So we actually have 3 more questions. We have Cleantech, smart climate models in microfinance and poverty reduction. So in poverty reduction and climate. So this, you know, so there will be. It's not perhaps a sector that we are very familiar with. And a lot of these will also be in adaptation and resilience. So to answer your question, there will be, we may not be the best to answer though. Then Satya is, since most climate tech are B2B and B2G and not consumer oriented, do you see copycat models from the West coming up in India? Or is there scope for India specific innovations? Okay, got it. I mean, there's more scope actually for India-specific innovations, of course, because it's probably less easy to do copycat models in climate tech in India than in others, because this needs to be far more contextualized, because the problems that we are trying to solve here are very different. For example, in waste, we have to solve basic problems, right? In collection, in segregation, sorting, right? So the West has solved this at the institution level years ago. So we do need innovation in this space now from startups. So yes, there's huge potential for India-specific innovation.
Right.
What domain knowledge should be gained as part of VC, or to become part of VC that focus on sustain? It's a good question Pooja has. All right, so
Well,
it's yeah. You want to ask? You want to answer? I'll come in after actually.
Thanks. I mean, investing has a lot of skills. Now, there's of course the actual act of investing itself. VCs often invest in multiple sectors. There are a lot of investors that come from industry, right? So in fact, especially the senior team, you'll see people from industry investing in that industry again. I think if you are a young person, if that's kind of what you're asking, looking to come into the investment world, nothing beats industry experience. If you're looking at joining the investment community straight from business school or very early in a career, it's a much harder question to ask. Cleantech is quite wide. I think a very strong approach is finding a specific aspect of cleantech and focusing on it.
Yeah.
You can be a generalist, but it's hard to be a generalist in cleantech. It's hard for us 12 years later to be a generalist in cleantech. Our team is wider. We have more people, for example, in waste, etc. But I would just pick one strong one and really focusing there. If you are thinking about a longer term career, there's nothing beats industrial experience, before getting into the investment side, industry experience, I should say. So there are many paths to becoming a VC, and they're very exciting paths as well. Our teams at some of the corporate venture arms come from industry inside the corporate, and they're very knowledgeable, very well networked, and very good investors as well. So I think there's multiple paths here. Now that it's frozen, so maybe I can come here. Yeah, very quickly, demand side management in the business model, like that just refers to in particular the power sector, where I'd give you maybe an example. You may have a device. We worked on this research project in Bangalore, for example, where we could where the discom can turn off your AC whenever there's a power demand surge, as a cheaper way to, for example, have system efficiency. Having less peaking power plants and just really shut off your AC in cycles. What are I forget those cycles, like every 15 seconds every hour. And if you're sitting in an office and you're getting your AC shut off, it doesn't have any material impact on you from comfort really, but it has a big impact on cost for the system as a whole. Carbon credits.
And in fact, Pooja, we're gonna we put this link on chat actually, that for people who are interested in climate tech VC actually. So do share your interest.
Right. So Ronil had another question about carbon credits. I think I answered this a bit earlier. Carbon credits after Kyoto Protocol ended really relied on the voluntary carbon markets, and those credits around energy really dipped in price, where things around, in particular, afforestation and for example, clean cooking stuff, the pricing became quite attractive, and you'll see VCM, voluntary carbon market revenues, go there. Now, having said that, there has been a pickup in the REC market globally. This is what I recently learned through a webinar we had 2 days ago with Shell Foundation, especially in the US. We have RECs or RECs here, renewable energy certificates here as well. There are solutions coming, there are instruments coming out that you may want to check out with Shell Foundation and I think South Pole are coming out to put together demand for distributed RECs. Now, and maybe also not even distributed, but that was a key focus area where if you do have a energy startup, even in EVs, and there is a distributed or especially an impact angle, there could be REC revenues that come out very quickly. And we can share links to what Shell Foundation and South Pole is doing there. Green sustainable bonds.
Cyril, any thoughts of green sustainable bonds for startups? Yeah, not so easy, perhaps for startups in India at least. As you know, Nalin does a lot of work on green bonds. So yeah. Another we've seen again, at least for startups. So Manthan has a question about the jobs fair and if there's scope for college level, not for profit. Sure, Manthan, you should write to us basically on info. Maybe Rishi, you can put the info at Climate Collective, and we'll put you in touch with the right person internally for this.
And then last question:
Are investors keen on investing? Go ahead.
Okay. Are investors keen on investing in systems change? No. That sounds scary. They would hope there is systems change, but whenever we think about investors, we should think about them differently from other stakeholders, governments, and others who will put in the effort. System change is a long-term process. Investors have a shorter-term horizon. In most cases, we do know some very large investors who will take a 10-year bet, and which incorporates many aspects of systems change. This is out of Singapore, looking in the region. This is few and far in between, to have at least VC capital taking this kind of bet and this kind of time horizon. But I think just because of time, maybe Dano, there's another question from Pooja. But it is coming back. VCM is coming back, voluntary carbon markets. You'll see that the RE100, for example, have made strong commitments to go 100% renewable or 100% net zero emission free. These will drive at least the RECs and some aspects of carbon credits over the years to come as they put these principles or these packs into place more and more. So it is something that's going to be very positive, at least in terms of revenue to startups that rely on carbon credits or RECs.
In fact, the idea is for these to be traded. These are fungible credits. That's what makes actually the market liquid. So no.
Okay. You froze a bit.
Another Denise has a question. Are there any companies? Oh, sorry. Let me put on my video. Are there any companies into carbon credits and afforestation? Several, many. Of course, these are linked, but also there's companies that do these separately. There's companies that are trying to organize the carbon credits market because it's largely, as Pratap mentioned, driven by voluntary carbon market. There's oftentimes bilateral deals between the companies that want to offset its emissions and they want to buy from a generator of carbon credits. Some of which could be afforestation projects, but not always, right? So you have clean cooking stoves also. So a carbon credit company would be working with a bunch of different credit producers and afforestation. I presume you mean companies that do projects in afforestation. So there's many companies.
Great.
How is Indian Cleantech? I think we're at the top of the hour, no? Guys, I would suggest for whoever's interested in climate tech specifically or learning more about it, we're planning this course and just want to see if there's sufficient interest in it. So there's this climate collective.typeform link that I've put in. So do fill it out. It'll help us it'll help us also validating whether there's sufficient need for something like this.
Right.
All right.
Thank you.
Should we?
And one last, just something we mentioned, if for those who are already angel investors, and also for those organizations, development organizations or nonprofits supporting investment into Cleantech after our investment conclave here next Monday, we're having an invite-only summit, Climate Tech Investment Summit. It's for learning how to invest directly into Cleantech startups and learning how to create syndications with other angel investors and cross-border angels interested in the Cleantech space. Here's a very quick registration form as well. Oops, I sent it just to one person. We sent it to everyone.
All right, I think we're pretty much at the end of this masterclass now. Thank you, Pratap and Nalin. This was honestly incredible. Exceeded my expectations, and I particularly enjoyed like the interactive slides. I think I'm gonna probably try to use that in the future myself. A lot of interesting things that I learned. Particularly, I think it was good to get like a comparison between the earlier sort of clean tech boom, and now it's more of a climate tech. A lot of VCs did end up losing money because I think it was a little early for even renewable energy. But now we've seen maturity over there, so a lot of capital is going towards the other sectors. So that's really good, really fascinating to see how this space turns about. And also another interesting aspect for me was the B2B part. A lot of these unicorns, I had personally never heard of them because they are essentially focused on the industrial solution. But I think as more and more people become more climate conscious, then you're going to see more and more B2C solutions. So it'll be interesting to see how that comes about. And the other part I also enjoyed was the climate fintech aspect. I think like packaging like financing solutions with climate tech based solutions. I think that's a way to sort of accelerate that adoption. I think this is something I hadn't heard of before. I think this could definitely be an area, particularly in places like India where we're seeing a lot of digital adoption. I think it'll be good to see how it evolves here. But yeah, thanks a lot. I think this was an incredible session, and thank you all for tuning in. We'll be posting the recording. I think if you registered, I'll send it to you by email too, and we can also send this type form that you have for Climate Collective to all the attendees to gauge their interest.
Great. Thank you. It was quite exciting to talk to more people about what is, we hope, going to be a very exciting space. It is already exciting, but could be one of our key investment spaces in startups in the short years to come as well.
Definitely. Also, I wanted to highlight that IIC and Climate Collective actually worked on a report, the Early Stage Climate Tech Investing Landscape Report. It's one of the first sort of early stage climate tech landscape analysis for India, and I've posted the link to it in the chat box, but I think we'll also link it when we send the email. It's a comprehensive report. I think a lot of what was covered in this masterclass will also be reflected there. So if you don't get the slides, I think you should just read that report. It'll cover it all.
Great.
All right. Perfect, guys. Thanks a lot.
Thank you for that. Thank you everyone. And I see. Thank you all for attending.